Hello, this is Imi from iTradeAIMS.com, AIMS Stress-Free Trading. This is the episode 9 of the London report. Let's do another one. Some interesting chat today, so I thought I will talk about that and a little bit about how the market opened today. So we know that the global markets, financial markets, are having a very high volatility because of all the news and stuff. Now at this moment things have quite settled in a way because the uncertainty is gone. We are quite certain that things are pretty shit. So the markets are kind of okay with it. They know what's going on. It's not a surprise, but still volatility is high. M1 DAX, it's been kind of good even when volatility was really down. DAX has not let us down. I mean, pretty much what we see on the chart today is what would happen in normal days as well. But I know we kind of got used to 50 and 60 point moves now. We kind of called it normal now. But anyway, this is the London Open. So what do you do when you are here at London Open? And by the way, you might have noticed I have the M5 chart on the left and the M1 chart on the right. Now that is the setup that gives us the edge. I usually don't put my videos like this because it's difficult to move both of them at the same time. But in live charts, you know, you don't move them. They move every minute themselves. And the other thing is, I don't really want to tell everyone that this is how you should be trading. Not on the open YouTube videos, but for my members, this is one of the things that I say to everyone. The edge, that if you want to have the edge, the setup one edge that we have in the setup book, that is to display what we call, I will try to write it down here, 1/3 space for M1 chart, 2/3 for M5 chart. Right? 1/3, 2/3. And the interesting thing to do that, if you want to do it, put 3 charts, one M1, one M5, one random one. And then click on, oh, you can't see that. How do I do that? Hold on a second. Here, we need to press this button. And when you click that button, it's going to arrange the 3 charts vertically, like so. Now, I want this one to be M5, it's already there. And I want this one to be M1, drag it there. And now I have the perfect 1/3 for the M5 and 2/3 for the M1. So that's one trick I wanted to talk about today. And then you can just get rid of the 3rd chart. We don't need it, but I have it there for a purpose because something happened in the chat room that I want to talk about. Let's delete this as well. So, what is happening is that as you wake up, you look at the chart and you are seeing that at Frankfurt Open, on M5, it's that, it's here, that's Frankfurt Open on M5. On M1 it's this. So when you look at the M5, you know that the market is going up. You have no business going short. That is 50% of trades filtered already. Now you're here and you're looking at it. You see a 3, you see a 4 down here, and then you see this. Maybe you took the hunt signal, maybe you didn't. But if you did, it was probably a good one. And then it completes this 3, 4, 5. Let me draw target zone. Sorry about that line. I'm going to delete that one. I don't like classing strong moves like this as wave 4, but we'll do it for this example. So you can see if this is your 3 and this is your 4 because there's a cross of 0 line. We believe more, when it comes to wave counting, we don't believe in price as much as we believe in this. So price might throw you off, the count and stuff. Don't do your count on the price. If you do your count on the price, Oh, I've got the camera on. I didn't know. Bloody hell. Hello, guys. So, if you do it on the chart, you're going to become an Elliottian. You're doing Elliott wave count. You don't want to do that. We trade Ames wave or E wave. So the moment you turn into wave count, even though you might have seen my charts I printed on the price chart, but the inspiration or the count that I have learned and how to do it, it comes from this. So if it ever comes to drawing, you want to be looking at this wave, right? And then you want to measure these waves. So this is your 3, and this is your 4, and this is your 5. But obviously, when this peak then went over this, this became our wave 1, and this became our wave 3. But sometimes wave 5 have extensions as well. But anyway, so London Open comes, and what you see is a U price. Now I'm looking at the M5 chart. You find yourself looking at a chart like this. It's gone all the way up. Let me draw some. This is for Doug or Scalper Man. This is your push. This is your pull. And this is your push again. Usually when you have push, pull, push again, we are not interested in those markets, usually. And that is exactly what was happening at London Open. But it was stress-free. Why? Because, oh, what happened? Element of surprise is gone now. Yeah, so at London Open, you didn't have a setup one. Very easy, simple. You don't have a setup one. You already have a 3, 4, 5 kind of completed, or a previous 3 turned into a 1, and what we thought was a 5 has turned into a 3. You don't have a fresh cross of zero line, no setup. If you went long, when it went all the way up there, it would probably be 1 hour. You would have got out break even anyway. So that was not bad. And then what happens is that price drops. And check this. You see, we don't trade. Working with 2 charts is a bit difficult. Fruit per se. What the hell is going on? Some people will call it the pin bar or the pin candle or whatever, or the hammer candle. This is a fruit candle. There's a strong rejection at the peak of a wave, so you can see the underlying of that is push, pull, push again, push, pull, push again, right? This is a reversal signal, or at least something that would come down, and that's exactly what it did. Is it still a setup one? No, it's not a setup one. Yes, I did go long here, but that was a setup 0. I only wanted it to do this. Looking at M5 now. If you look at this candle, I want the price to come here, and around these area I wanted to exit, and that's exactly what I did. Let's go to that chart. Here it is. I took this as the entire 3, and then this as the London Open down wave. Now, as you can see, this down wave has come too far down here. So if this was our wave 1, then this down move should not come below this. So this, as you can see, was not really a pretty, and I will give you a picture that you can then compare the two, why this one is not pretty. This chart is not pretty, and the pretty charts, I will give you a picture of that. What is a pretty chart, where you have a clean, clear wave 3 and a clean, flat wave 4. We'll look at that in a bit. So, but anyway, I was watching this, and I was looking at price. So this is part of my LOBOT trade, where I literally will look at the momentum of the chart. And that is what led me to take trades like this. Come up here. So at LOBOT, a LOBOT B-trap fruit. So I saw this, that because the wave was complete, which I showed earlier, at London Open, so I saw this rejection, it created this fruit, went in here, another entry here based on these 3 momentum candles, and then another entry here below the box, and just one more entry to make it big, and then exited a few candles here when it started to pull back up. That is what so I was seeing, and around this time I was talking to Eric. Now let's bring the chart. So I asked Eric, question was, why do we not trade that setup, at the London Open? The answer was simple, that it's not a setup. That's it. Adam Eppley. No fruit for me. I deliberately removed the indicator. Yes, that's it, because you're not trading the fruit method. Don't have the fruit indicator on. It's not about the indicator. It's about understanding the concept, the pattern. But I said, if you understood the fruit method, you won't have to have the indicator to see it. You just see it. So like I was pointing to that, let me bring the chart. I was pointing to this candle, the fruit pattern, which is the strong 3 up, and then when it ends, you see this reversal kind of candle. So although you don't trade the fruits, they do give you information, right? And you can use those information. So I was looking at this chart and I was talking about things like, there are times when you can actually literally see where the market is going. For those next 2 to 3 minutes, you can predict where it's going. And it was around this time I said it's going down. Around this time I said it's pausing, but it might break and go down. And around this time I said, now I don't know where it's going. And then you have this reversal fruit candle again. And then as I'm formulating that in my brain, price does go up. So I'm feeling confident that I was right. And then it pulls back and it creates this impulse candle here. I went long here, which resulted in not that, but this. So a quick 2 entries, exit it up there. So you see impulse, 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 kind of pause, pause, pause. I'm thinking this is happening. I'm thinking this is happening. Okay, fine, get out. And now let's go to the second thing that I want to talk about is Doug's trade. I don't know if he is Doug, but we'll just call him Scoutman. So Scoutman saw this over here. Around this time, I was having my breakfast. I came here and I said, let's go to the chat. So here's the picture I posted that I went long. And obviously, none of the members of chat room should have or could have taken this because this is not a setup one. Yeah, so that created a debate as to like why I took the trade and why actually we shouldn't take that trade. I can take it because I have this particular thing in my trade plan where I can watch the charts during the London Open, the LOBOT strategy where I mostly trade with price action and momentum of price, right? So that is, like I explained, so I can understand the momentum of the chart. So it wasn't really a setup 0 or a setup. It was really trading the LOBOT where I mark the London Open price and then I see where price moved away from the London Open and I go with the momentum for an hour or so. If nothing happens, then I don't touch it. And if I have a clear setup 1, then I don't bother with the momentum stuff. I would just trade the setup or the hunt signals. Right. I'm sure this would be new for some people. So here I come back, but nothing on DAX. So my initial instinct, as soon as I see this, I say, back, nothing on DAX. Then I look at it and I'm thinking, oh, what a tight box. It might break. But then I don't take the trade. Why? reason is coming. First, let's look at the guys who actually took the trade. So if you go back to the chat, Scalpman, I got a setup 1 on DAX at the moment. So he's seeing it as a setup 1. I took the second blue dot, so he took the trade. Okay, so he's going to share his chart. So here's the chart where for some reason he's having, you know, the fractals and the box at the same time. He tried to explain it, but I didn't really understand why it's there. This is just like wearing two underwears, right? Because one is box, one is fractal. It's the same thing, only box is better because it doesn't do preemptive fractals, so it doesn't repaint. And these ones repaint. So the code for fractals in the MT4 is not good. Now this is rubbish. Like, this is not a setup 1. You need to have a clean, clear wave 3. So we went into that discussion, and that is really the purpose of the chat room, to align these thoughts of what the patterns are. So Ganesh has been under my training for the past 6 months, like nearly every day. He understands the setup 1, finally. Really proud of him, really well done. But you can actually undo that as well. I've seen it with some people who actually understand the setup 1 straight away, and they go off. I don't know what happens to them. They do something else and they come back. They don't know what setup 1 is. So you have to do that practice. But from my perspective, you can't really undo that. Maybe they didn't really get it. Maybe they were just lucky on the few pictures that I saw and I thought they got it. But maybe they didn't get it. But Ganesh seems to have got it, so he understands that. So I asked, kind of, you know, to check or to help Ganesh understand it further. I put him in a situation to say, okay, so why don't you explain to us, you know, why was this not a setup 1? So Ganesh came up with a nice picture. So he's pointing to the M5 chart. As you can see, he also has, although it's not 1/3, he's got 1/4 and 3/4, but that's fine if it works for him. So he's pointing to this wave here, this down, and this up. So he's referring that, saying the picture on the M5 is not really impulsive, as you can see. Let me bring my chart. So if you look at the M5 chart here, this is where we were at that time. We were here. So if something was happening around here when the gateway was open like this, it would still be okay. But when it did this, and then went up and then created a box up here which was level to this, so it did not create a higher high. It broke the sequence of the higher highs, so it's not really an uptrend anymore. And then inside it you see a setup which would be on M1 like so. This is not a setup. You have too many levels to the left, then you have levels up there which are the peak, too many up there, creating so much problem. I'm going to draw a little bit of this as well. So you can see these levels. It's not good. It's not clean. So we don't want charts like this. It's not a pretty one. So the question then is, what is a pretty chart? As you can see, he's pointing this bit to this. This is exactly how I do it in my charts and stuff. So he's pointing to the fact that you need to have a clear, this wave should have actually gone up above this, then went sideways, then we would be interested in taking a setup 1 over there. But the fact that it did not break highs here and then it went sideways, this is crap, right? So he gets stopped out, and then comes the time of, so he told Ganesh came up with an example to say, we don't trade this pair, or we don't trade this next thing I'm talking about. But the picture on that was perfect, and that was Bitcoin. Forget what market it is. Just look at it. This is the clean wave 3, and this is your clean wave 4. That is what we want. So you have this vertical box creating a strong wave 3 up, and then you have the horizontal box creating a very, very sideways wave 4 with tiny waves going sideways. That, my friend, is the setup 1 which breaks out here. And now let's check the next picture where it actually does. And this is what it is. So you can see I marked the picture with this would be a 1 and 2. Not interested in whether it's a 1 or 2. What we're interested in is that we have a strong 3. And then we wait for the nice flat wave 4 sideways. And then a very tight box. From here, price takes off and goes towards target zone. As you can see, there is divergence between the first peak and the second. Not price, but this tells us that this is 3, this is 4, and this is 5. We count waves on the AO, the E waves or Ames wave. You can do it on price, but then that would mislead you many ways. And then you will go into the territory of Elliott wave. We don't trade Elliott wave, we trade the wave, this wave. So this is where we get the inspiration from. So that is the point I wanted to make. There's a few more things we talked about. We talked about I think we talked about the angles of the trades. Let's have a look at one more picture. So I looked at this one, why I call this scrap. Like I explained earlier, push, pull, push, pull, push, like waves after waves, but nothing is breaking or creating new highs. So you're not getting new highs, you're not getting that. So that wave, because you're not getting strong pushes up, the price actually market is going sideways. If you look at it as a whole, it creates an angle like this. This one was still better. The angle is still good. And okay, let's go into that bit as well from the chart where I explained. If you look at this bit, this is a steep wave. So if it continued with this, went up and broke the highs to the left, and then created something sideways, it would be nice. But instead, what we got was something like this, which is just merely 43 degrees. That's not a strong wave 3. And look at this, a peak here and then a little peak and a little peak. We don't want this. What we want is this. Strong up, nice and clean. This is where your hunt would be appearing. In most cases around here, this candle would become a nice cherry and you take this trade. And this pattern as a whole would create a cherry on the M5. Actually, let's have a look at that as well. So you will see if it was. So I'll bring that chart. This is the M5 of Bitcoin. This is the chart that I was showing you earlier. You can see a strong 3, 4, and a 5. And this chart, this bit here, will create the hunt signal on the M5 chart. Let's go to the M5 chart. Let me just delete that. You can see this is the hunt signal. So you have a new peak, dark tones, and the hunt signal appears. You take it here. Your stop loss is, let's say, 38 points. And you grab yourself 230 points as profit. So this, by the way, the guys who know it, this is ABC. It's a PC pattern. This is a PC pattern. So this was a PC hunt seed. Higher probability setup. Always take it. Now, as you can see, you're getting peak and another peak with divergence, and you have a strong move up. And you can see hunt here. This is not where you take hunt signals. You want to take hunt signals within this move, around here. On M1, I'll show you where you would have taken the hunts. So a hunt signal, if it appeared here, if this was a hunt signal, that would be a perfect. This is Monarch, so that would be a Monarch signal. This would be a nice hunt signal, which didn't appear. But when it goes and does this, push, pull, push again, you don't want to take this hunt, not this, not this. These are not hunts. And especially when the gator is sleeping, you're not interested in hunt signals. Then you're interested to wait for the setup one. I hope it makes sense.